And welcome to the VSA Capital Tech and Transitional Energy Podcast. We obviously had a week off last week because it was the long Jubilee weekend, which I hope everybody enjoyed. Did you enjoy it, Phil?
It was absolutely fantastic, and we got the weather as well. Hurrah! So a good turnout all round, and I understand that you've been left with a barrel of beer as well, Andrew, from it.
Don't tell everybody, they'll be around my house trying to get a free pint off me. But you're right, I've got a whole barrel of London Pride sitting in my house, which I really must get rid of somehow. There's only one way to get rid of a barrel of beer, and that's drink it. But I'm going to drink it with other people in my street.
Very good.
Even I can't drink 72 pints of beer.
No.
Anyway, let's turn to... I'll tell you, why don't we kick off? There's a piece of news out today which I think is quite important and sort of sets maybe the tone for this podcast. And the market actually wasn't that impressed by it. We had an update from ITM today, didn't we, Phil? Why don't you talk through that? And we'll discuss that, and that'll lead on to, I think, other things in transitional energy.
Yeah, this is ITM Power PLC. What's the market cap now? Well, it's well over £1 billion, that's for sure. So it's electrolyzer technology that's used to take electricity and apply that to water in a very complex way and produce hydrogen. So yeah, very important in the hydrogen economy. And they had a trading and corporate update today. And they were pointing out, it's quite interesting that they had, looking at the size of their sort of backlogs and what was in negotiation, and bearing in mind the valuation, they had said that their backlog was of about 74% to 75 megawatts. Well, that was also work in progress, and then contracts backlog was up 160%, to 755 megawatts. So it's all sort of kind of, progress in terms of orders. But then we came to, the revenue for the business, and it was expected unaudited financial results for the 12 months to 30th of April. This is from the company. Revenue of £5.5 million, up from 4.3 million, impacted by a deferred delivery on products and revenue recognition slipping, an EBITDA loss of 36 million. Well, we know the company's investing very, very heavily in its technology, and a cash burn of 52 million, but it's sat on year-end cash of 364 million. So it was kind of, I read it and I just did wonder if the sort of market had been expecting, I've not got the consensus forecast, more progress in terms of that sort of top line of projects. I don't know what your take was.
Well, regardless of my take, the stock is down 13% today. So clearly the market is disappointed. The market cap, for what it's worth, is about 1.8 billion. But with the price down here at sort of 250p, slightly under 249p, we've come down a long way. We peaked, Phil, at about over 700p, I think. So, the stock has had quite a fall, as basically in line to a certain extent with the whole transitional energy space, where everything really got a little bit overhyped, I think it's fair to say, sort of 18 months ago. So look, I think that what people are starting to realize is, and it's funny how the market works, it got overhyped 18 months ago when everyone was extraordinarily excited about transitional energy. And now the market's taking this view, oh my God, it's never going to happen. It's all happening too slowly, and these companies, we overpriced them, et cetera, et cetera. You see this so often in particularly in sort of the techie type area, that investors are often really bad at understanding the timing. You see it also in the mining sector, actually. People get very, very excited at exploration, but don't realize just how long it then takes to get into production and to throw off all the cash. You've got exactly the same sort of thing happening here now in transitional energy. And ITM has fallen foul of that, should we say. And as you say, for a 1.8 billion market cap company, actually 75 megawatts isn't really that exciting.
Yeah, exactly. You've got to remember this stock is a 10 bagger as well, even at today's price. If you look back on that chart, it's up tenfold from 28p 3-4 years ago. And I think, do you know what? One of the worst phrases I always hear is like cookie cutter approach to tech. What the hell? Complicated technologies take an awful long time to get designed and into production, and then into production where they can be produced commercially and to make a profit. It takes a lot of time. And there's always the temptation is the cookie. Oh, yeah, it's easy to replicate. We'll be able to make thousands of damn things. And yeah.
Well, it takes a lot of time and a lot of money. I mean, luckily, ITM have got a lot of money, as you said, like whatever it was, 364 million.
Yeah,
so
absolutely.
they've got the money. They will get there in the end. And they've got some good partners. They've got partners like Shell. They've obviously got this new joint venture with Vitol. So they're in with the right people. So look, it's a company that's going to go on and win. It's just a case of what price do you pay for it today, and the market obviously has taken a somewhat negative view. Now let's turn to the same sort of, well, not quite the same space, but our client, Invinity Energy Systems, to some extent, or at least the whole long duration energy storage, because news coming out of the US this week is actually pretty exciting on this. The Department of Energy has basically said that it's going to drop in, I think, I forgot how many $1 billion it was. Anyway, can you remember exactly how many it was?
No, I can't, but it was a
well,
lot.
Anyway, we're talking billions, not millions, basically, into supporting $500 million actually to support long duration energy storage. This is US government money. And I can also tell you there's going to be grants and loans, and the California Energy Commission as well. We know is tendering as we speak, or has tendered for non-lithium long duration energy storage. And I mean, at the moment, as far as I can see, the only non-lithium long duration energy storage that works is vanadium flow. So to a certain extent, it has to be like that. I noticed also that Biden has waived tariffs on solar panels being exported from Vietnam and Cambodia, Malaysia, and Thailand, as they put it, to serve as a bridge whilst US manufacturing ramps up. And so there is also, I can tell you, a huge move at the moment in the US for what I call American manufacturing by an American company for American customers. And if you can provide that, basically the American government will pretty much pay for you to do it. And I think it's fair to say that, our feeling is that's sort of the direction of travel for Invinity. The news so far has ever pointed ES advisors out in New York to help them with that process. As most people know, I've been in America looking at various things for them, and you can see where the direction of travel is. But there's a company, obviously, that currently the market, again, it's underperformed in a similar sort of way to ITM, which is very disappointing, but it's just the sector. But it's in a completely different valuation. But we still got to wait and see. I mean, the proof is in the pudding and all those sort of things. But it actually, funny enough, sometimes when the market is most bearish, it's when you actually want to be buying, because actually, the storm clouds are about to clear and the sunshine's about to come through afterwards.
Yeah, and you always ask yourself, Andrew, is the market still there? Yes, it is. Is it going bust? No, it's not. Do you know what I mean? Has it got the right partners? Yes, it has. That's the view you take of the business when the share prices are, depressed like that. Those fundamental questions. And also with do you know what's quite a big, been reading a lot about the battery storage markets in the UK, and the sort of tariffs getting paid now, and the business models, and it's shifting quite significantly from where you got a spike in the grid, or a lapse in grid power because of demand in winter over a short period of time. The batteries would kick in, give a jolt of energy into the grid, and it's not like that anymore. They are actually becoming it's more about the energy rather than the power. It is energy, this long duration storage. It's the ability to produce electricity over a good period of time during the day. There's quite a move in the way the business models are working for this as well. So yeah, it's a lot going on.
Well, the other thing is where fuel prices are at the moment. We all see these things. Diesel is now £2 a litre, £100 to fill up your car. I think people, pretty soon must be the competitiveness, shall we say, of renewable energy is going to get more and more attractive because the gas and oil price is just so strong. Now, I'm just sort of sticking on this whole battery theme, because a few other things that I've noticed this week. Earlier this week, we had AMT Power, which is trying to build in quite a few different sort of batteries up in Scotland. They signed a joint venture with Vertec to collaborate on hydrogen hypercars. Now, AMT Power, I know when it came to the market, we did question slightly the valuation because it came obviously when the market was in this ebullient mood. It has come all the way back, unfortunately, from sort of 300p all the way back down to sort of 70p. So we were right on the valuation. I still quite like to go and visit the company, actually try and get an understanding of it. But again, this is a case of batteries. They take a long time to develop and they cost a lot of money. I'm sure they've got some good technology. As I say, I'd love to go up to Scotland and see it. And then the one, though, that really has caught my eye, and it's one that we have talked about a bit in the past, Phil, and I'm not sure if we mentioned this on our last podcast, but Nano One Technology over in Vancouver, run by a guy called Dan Blondal, who is just a genius when it comes, in my view, to batteries and battery technology. I've actually been around his labs and everything, and it's just like going back to university and seeing the chemistry labs. But they obviously bought a load of the assets off Johnson Matthey when they decided to quit the battery market after spending 140 million. But I now see today they've done an amazing deal, actually, and they've basically, and I haven't quite worked out, I need to probably look at this in a bit more detail. They seem to have got Rio to invest in them. Rio Tinto, the mining company, $10 million, and have a strategic partnership as it puts it. The partnership will accelerate the commercialization of Nano One's one pot and M2 CAM technologies. Now, this is actually fascinating to me, but it also shows me two things. One, clearly Nano One is doing all the right things. Two, to get a partner like Rio Tinto and put money in, that's what you got to do if you're a battery company. You need good corporate partners. But they've got something exciting here with all these people and such interest. So look, I'm a big fan of Nano One. We've talked about it in the past, but I view that as a pretty exciting deal. Don't know if you looked at that at all, Phil. But
I did briefly look at that because I was when I saw the deal that what they acquired from Johnson Matthey. I was just for £6 million. Team in Canada, R&D, commercial scale cathode production, product qualification, quality assurance systems. And a capacity, and a plant, 2,500 ton capacity plant, LFP production plant. That was a good, interesting deal. So they're clearly moving ahead, and to get that sort of external interest, I always think when you've got a big industrial partner, it's the level of due diligence that they're able to do, Andrew. That's why that's always such a big thing. Interesting that
I don't disagree with that at all. But I mean, Dan, if you are listening, please come and dual list in London. I'd love to take you around London institutions. I think you've got a fantastic business. Anyway, so I mean, there's a lot actually happening, is the answer in the transitional energy space. Look, I know we tend to focus on our sort of favorite companies, which is somewhat understandable. I actually, for what it's worth, over the Jubilee weekend, I was actually playing golf with the fund manager of the Schroeder Global Energy Transition Fund. Happens to be my son, which I was playing golf with him. He hates talking business with me, although one day I'm still hopeful I'll get him onto this podcast. But he was saying how volatile the stocks in his sector were and how he's really struggling to keep his head above water, I suppose. I mean, God, if you can keep your head above water in these markets, doing bloody brilliantly. And actually, in fairness, he is. I was looking at statistics. He's like maybe off 1 or 2% this year, which is very good. But I was also just looking at his. You can look up on the internet the top 10 holdings of the fund, and he's got some interesting things. But it looks as though he's going to what I describe as been in a fairly defensive mood. His biggest holding is Vestas Wind Systems. Then First Solar. Interesting enough, he has Johnson Matthey as his third largest holding. Samsung, LG Chem, Nexans, Volkswagen, Solar Edge Technologies, Corp Acciona, Johnson Controls International. So a fairly defensive stance he's taking at the moment. All big international companies as well. Not ones that most listeners to this will be able to get hold of. And that's one of the reasons why I think this is a great fund to hold if you believe you're an exposure to the global transitional energy scene, which I think you do, because it's very important.
Yeah, and becoming, despite the current turmoil, there's probably a fundamental change coming in it and the scale of investment in it because of the power of fossil fuels and what the damage that they could potentially do to the economy. I mean, I'm a bit too old to remember the oil shock of the early, was it 73? The oil shock when OPEC rocketed the prices up, but the damage that was done to the economy by that reliance on, one particular source of energy. So I think when the dust settles, there's got to be more emphasis on this, surely.
Anyway, look, probably enough on that.
Yeah.
We will fairly regularly. Let's have a look at, shall we, some results maybe?
Yeah.
Don't know if you've got any that you wanted to mention.
Well, we've got on the nano subject, Nanoco. N-A-N-O.
Quantum dots.
Quantum dot technology.
Quantum dots and legal whatever litigation.
Yay, nanomaterials. So these are materials that enhance displays. Those lovely flat screens that you have in your living room, and obviously Nanoco was in with dispute with Samsung on a litigation, one of the biggest display manufacturers in the world, and the judge in the US rejected Samsung's request for a further delay and ruled in favour of Nanoco to lift a stay on the litigation. I think it was I'm no lawyer, but I think it was sort of positive for them because the litigation is against Samsung. That's right, a willful infringement of the group's IP. So that was sort of favourable. They also won some new business as well, a work package for a European electronics customer. And they said it's a year-long contract, so that's good. And I think they announced a fundraising as well. Andrew, I'm not sure if they announced the final result of fundraising, but they had said the fundraising to take place on the 6th or 7th of June and was very significantly oversubscribed.
Yeah, on the actual announcement, they didn't say by how much. They just said they'd done one. But Wattie, if you're listening, come and tell us more, and we'll give you a good push. She's the IR lady. One I saw actually, which I like, is a company called Ashtead Technologies that was floated out of Ashtead fairly recently. I remember actually when I used to act for Ashtead back in the 90s when it was actually a very small company based in Ashtead. It's now a huge FTSE 100 company, but Ashtead Technologies is their sort of subsea now independent group. They had some really good finals. Group revenue up 32%. Adjusted EBITDA increased 118%.
Whoa.
And they are, they say the twin themes of energy transition and energy security are providing strong market growth drivers for the group across both renewables and the oil and gas market. And the group's trading the first 4 months of 2022 has been strong. The board has raised its profit expectations. So I think Ashtead Technologies actually is a great company to look at. It's in all the right sort of places. We haven't probably looked at it close enough, so I can't give you any sort of more detail on that, but I think it is a very good business.
Yeah, and as you say, nicely hedged as well between sort of renewables and oil and gas, but that's quite just quickly, that revenue growth versus the EBITDA growth. The fact the EBITDA has grown that dramatically on the revenue growth is always that's a good sign for a business. That sort of leverage. Wow.
Yeah. Now the other result, which I'll let you talk through because I'm probably biased because I really like this company. I think it has huge potential. But I know you listened to the analyst call and I didn't because I was tied up doing something else. But that is Nexus Infrastructure, where they had interim results, didn't they?
Yeah, this ticker is NEXS. And there are three strands to this business. The first one is Triconex. So their skill is in installing infrastructure into big new housing developments. And that includes, the water, the electricals, the fibres. So they do that all over the UK. They have Tamdown, who do earthworks for big property developments. And the third strand of the business, which initially got us interested, was the smart networks business. And this is EV, electrical vehicle charging infrastructure. So I guess the core of this group's its ability to work with big networks, like the electrical grid for EV charging, fiber optic networks for comms into the big housing developments, the water and general sort of electricity. But yeah, in terms of the results, Andrew, they're quite mixed, and they're mixed because it's three different fundamental business areas with different drivers. So, for instance, if you looked at the Triconnects, and we've had a good housing market, lots of development happening, their revenues were up 2.5%, operating profit up 2.5%, and order book up 3%. So, that's all quite nice. Tamdown, well, this is the earthworks part of it. That business has been in very much in a turnaround mode. And they've managed to move that, interestingly enough, from a profit of 0.3 million to a profit of 1.1 million. And their order books, they'd fallen slightly, but the fact was in this business, they were taking on getting higher margins for the business. And a really exciting part that caught my eye is on eSmart Networks, which we've been looking at very closely. And the revenues, and this is a newer business, bearing in mind, the revenues are up 2.8 million to 8.6. An operating loss of 0.4 and moving to an operating loss of 1.1. Now, losses increased slightly, but bear in mind the revenue jumped because they're investing heavily in growing this business. And they, more importantly as well, they saw their order books up 72% to 21 million. So this is, this business, I don't know how long ago it started, 2 years that, but now they've got onto orders of 21 million and a half-year revenue of 8.6, really accelerating.
Yeah, look, the other thing I like about this business is that it's got a lot of cash.
Yes.
23 million of cash.
Yeah, 23 million of cash in an environment that's getting tougher. And when it comes to negotiating business, cash is king. Yeah.
And the other thing is they're to me, one of the companies that they're starting to look a lot like, they've still got a bit more work to do, is a company called Alphen, that is a Dutch company. And we've talked a little bit about Alphen in the past. I've been a big fan of it. But I mean, Alphen, believe it or not, we just talked earlier about how transitional energy stocks are down quite severely this year. Alphen actually is up about 20% this year and actually hitting new highs at 102 euros. Just to put it into context, that the stock was back in sort of 2020, so a couple of years ago, was trading below 20 euros. So if Nexus can do anything similar, then we're in for one hell of a good ride. So I do get excited by this stock.
Yeah, it's they're in a super space. And no matter what happens to the economy at the moment, the charging infrastructure is definitely required.
It's more than just charging infrastructure. Yeah. The charging infrastructure, but I mean, it's the whole way the grid is going to reshape itself as we move to, long duration energy storage, wind and solar power. There is just so much work to be done, and a hydrogen economy. It needs all three divisions, in my view, for this move to transitional energy. Anyway, enough probably on that one. Although Alphen, by the way, is still a great stock. We should look at that more. Maybe go and see them in Holland. A little trip to Holland, that does a lot of good, Phil. What else you got?
Well, going on to more sort of techie things, I noticed that what have we got here? You come across One Spatial, so mapping software.
Yeah.
So ticker is SPA, smaller company. They reported full-year results a few weeks ago. Revenue of 27 million and EBITDA of 4.2 million. But their software is used, and it works with the Ordnance Survey software, I think, and they've obviously got their own. But what it does, it's mapping software, and it tells you what is where. So if you're a utility, it will tell you where all your pipes are and drains are. If you're a rail network, where your controls are along the line, control boxes. So what is located where, and why is that important? Well, if you're doing any kind of maintenance, you need to know what you're digging up and what is around, what is around in the area, or trying to, monitor control boxes, for instance, on the rail networks. You need to know where it's located. That's what their software does. And they announced this week that they had secured a 2-year contract with HS2, who are clearly developing the high-speed network up to Birmingham and beyond. And this is to help them with construction-related data for the network. So I thought that was quite good for them. And they're saying it's the first significant contract with HS2. So, okay, it's revenue of £1 million over 2 years, but it's the fact that they are now in there and approved as a supplier. I think it's a good step for them.
Yeah, they were presenting at the Mellow event that I was at the other day, and I think a lot of people I was talking to said it was the most impressive company they met. So
yeah, so there you go. So well worth a closer look. Now, something that's a lot bigger is RSW Holdings, RWS Holdings. I've probably got well, the ticker is RWS anyway. It's 1.5 billion market cap. Can you remember SDL?
yeah.
Yay! Well, RWS, they acquired RSW. They acquired SDL. And so this is all about language translation. And much as one may assume it's all done using Google Translate, no, it's not, because of course with language you can do part machine translation, but it absolutely needs to be localized, it read by a human being, put into, properly contextualized by a human being. So they combine the two. That's called localization, where you're using humans and you work alongside machine translations. Now they supply their software and services. It goes into 18, just on the technical side, technical translation, 18 of the top 20 law firms and nearly all the top 20 pharma companies. And that's just for technical translation. But you go to any corporate website, it needs to be localized for the country. So they were reporting sales and results. So it's half year results. Sorry, I'm mumbling here. I shouldn't be. But their core revenues were up 9%. Profit before tax was up 120%. And I've not stripped down these results in great detail. See how much is sort of SDL coming in versus organic. And the shares are down 40% in 6 months. But it sort of occurred to me that if we head for, as more of an economic slowdown, these are still the sorts of services that really are needed in terms of, as companies are marketing and launching new products. So this is one that's probably well worth a look at from a recovery perspective.
Well, I'll tell you one that probably isn't worth looking at from a recovery perspective. Well, having said that, its market cap is now down to 7 million, and therefore there's little more that can be lost. And it's one that we've unfortunately been incredibly negative on for quite a few years, and it's Xerox Technologies. Unfortunately, they had an announcement out today. Actually, they had an announcement out, earlier this week. There was a delay to the launch of their IFB domestic machine, but they're sending their team down to Goa to see what's going wrong. I mean, I think you'd quite appreciate it if I sent you down to Goa, wouldn't you, Phil?
This is washing machines.
Yeah.
Is it?
It is. Yeah, it's the most peculiar RNS, sending their team down to Goa. I thought that's when you went on holiday, not to sort out a washing machine. But anyway, look, the stock price has fallen from there's various splits and things, but £250 down to 33p, i.e. basically just about every penny that's gone in there. And there's been a lot of money that's gone in there. Hundreds of millions of pounds has basically been lost trying to reinvent the washing machine.
Oh dear. Well, that's a very sad. Hey, I visited Hot Point's factory many years ago, and there's lots of people in lab coats loading washing machines.
Actually, I think AO World, don't they sell washing machines?
Yes, they do.
And they announced this week they're closing their German business. So clearly the washing machine market is very tough.
Hey, we've got to do some more research into this.
We're all doing a hand washing now. We don't really bother with the machine. God, the consumer squeeze has gone so far. We don't want washing machines anymore. I don't know. Right. Well, have you got anything else you want to mention, Philip? Probably dribbled on or whatever long enough.
That's it, I think, Andrew.
You're just quietly giggling to yourself, aren't you, about bloody washing machines?
I am very. I have to quickly tell you, I was working for a microprocessor company. The washing machines were going to fast spinners as soon as you switch them on. So I sat there with an engineer for a week in the hot point factory trying to get them fixed, which we eventually did. Hurrah.
Well, there we go. We'll call it a day. If anybody wants to send us any messages about this podcast, telling us about some interesting washing machine story, or anybody got anything that they want to us to talk about, then please just message us and we will. Or if anybody just wants to send us a check with some money for giving a wonderful podcast, feel free to do that as well. Or as we started, pop round my house on Saturday and have a pint of beer. But on that note, we'll call it a day and we will speak again next week.
I look forward to that, Andrew.